We have another update from Barrick after their conference call, and interesting details as this story in Mali continues to develop. Hello and welcome to the Northern Miner Podcast. My name's Adrian Pocobelli, and it continues. This journey of ours, it's quite interesting when I look back and think of how the narrative has changed here in the mining industry over the course of doing this podcast, which is going on, since 2019. I've been involved here, and it's quite interesting. Looking back, I would say the real focus back in 2019 was ESG, environmental social governance. And so, as I like to say, the mining industry has had the spotlight on it as a result of really 20 years of bad press, at least. Some of it deserved, but perhaps some of it overstated as well. So I've long maintained, because of this spotlight, the mining industry is actually arguably one of the most conscious industries, at least it was, say, in 2020. It was doing ESG before it was cool, is what I'm trying to tell you here. Now, okay, it's more common, and of course, everybody wants to be a good corporate citizen, and they would have said so 10 years ago, but I would argue the mining industry had been working on really the organizational development of an ESG, conscious industry, really, I would say, ahead of the crowd, shall we say that? And as a result, it is really ingrained, I would argue, in the organizational structures because, of course, when any of these people who are involved in this industry leave the office, they're dealing with people generally outside of the mining industry who may not have a good view on the mining industry. And as a result, they are ready with their defense. They have been preparing near a decade, one could argue. And of course, before ESG was CSR. Anyways, let's not get off topic here. But all to say, it's interesting to see how the narrative has changed because, of course, 5 years ago, ESG, ESG, ESG. Today, critical minerals, energy transition, geopolitics, Africa. Quite interesting, isn't it? So with all of that in mind, let's take a look here. So Barrick Gold had to do their earnings call because, of course, they have not really addressed this speculation, as Mark Bristow put it in the conference call, on what is happening in Mali and this sensational report, really, at the end of the day, as I argued 2 weeks ago, from the Africa report, which does very good journalism, as far as I can gather. And I follow it pretty regularly and even subscribe. So they put out this sensational report, I believe it was back in February, on Barrick and maybe the Wagner Group, perhaps wanting to do a soft takeover of Barrick's mine in Mali, the Loulo-Gounkoto mine. And all that happened really since then is Barrick put out a press release 2 days later saying the benefits that Barrick has brought to Mali with this Loulo-Gounkoto mine. And of course, as we've learned in the past from Fortuna Silver CEO Jorge Ganoza, this is one of the most prospective, richest areas for gold in the world, West Africa. As Jorge put it in our interview maybe a year and a half ago, if you removed all of the borders and you just looked at the region, it is the richest in the world, to paraphrase. So it's no small matter. It's a major mine for Barrick. I think it's in the range of 1/10 to 1/8 of its production. So Barrick had their earnings call on May 1st. And as a result, they have to take questions, and they were, I would argue, forced to comment on it. So I brought up the transcript here so we could go through some of what Barrick Gold CEO Mark Bristow said. Now, just before we do, I just want to set the table with how Barrick did. And I checked in with ChatGPT, and they did beat earnings, which was 17 cents per share, and there was expectation of 15 cents per share, and the company's revenue was $2.75 billion for the quarter, slightly above the consensus estimate of $2.74 billion. They declared a dividend of 10 cents per share, in line with performance dividend policy initiated in 2022. They also highlighted, back to sustainability and ESG, the commissioning of 50% of a 200-megawatt solar facility in Nevada, supported by over $100 million in U.S. government incentives. Finally, on Barrick's earnings, copper and gold productions were below estimates, and I asked ChatGPT to actually give me the numbers here. First quarter, 940,000 ounces of gold. And remember, they were already kind of low in 2023 at 4 million ounces for the year. So now just shy of 1 million ounces on the quarter. So interesting, and 40,000 tons of copper. And in 2023, Barrick mined 210,000 tons of copper. So a little below a quarter for the quarter of their copper production. Now going to Mali and the sensational story that we've been following here, let's take a look. This is Mark Bristow from the transcript. Loulo-Gounkoto, which is the mine in Mali, increased production and kept costs tightly controlled. Its second solar plant was commissioned during the quarter, replacing heavy fuel oil with solar power as an energy source, delivering a cost saving of some $6 million just this last quarter. And I think also mining companies are reading the tea leaves with this green nickel debate. And I would argue the forward-looking CEOs are saying we need to make sure we have green metal, because this narrative continues to develop momentum of there being a green nickel price, and we're going to see that with aluminum. So LME is now considering that. But so here they are in Mali with a second solar plant commissioned during the quarter, replacing heavy fuel oil with solar power as an energy source, which is actually delivering a cost saving of $6 million just this last quarter. Incredible. Bristow continues, while on Mali, we are aware of press speculation originally reported in Africa last year and recently picked up by the Canadian media. I want to just say that that's very accurate. Reported in Africa last year and recently picked up by the Canadian media. That is a very accurate description about the government's so-called intention to expropriate the Loulo-Gounkoto complex. As we have previously disclosed, we have been in ongoing dialogue with the government of Mali on several matters that impact our operations. Kind of a vague sentence there. As we have previously disclosed, that doesn't mean that they're talking about this, specific issue. After a very accurate first sentence, kind of a vague second sentence. As part of our engagement, the government has recently confirmed to us that they do not intend to expropriate the complex. So we got some news here. So they were directly discussing this issue. Like any government, Mali wishes to maximize their benefits from mining, and Barrick remains committed to an equitable sharing of those economic benefits with our host country while protecting our shareholder rights. Our engagement with the government is continuing on that basis. The Yalea district remains highly prospective. And I would argue this has been Barrick's main argument, and you saw it in the press release that they released after the Africa Report article. To me, the carrot that's being dangled here by Barrick is ultimately, should you be thinking of expropriating this mine, you're going to miss out on all of the exploration work that we're doing, and you're not going to be able to take advantage of it. So really, at the end of the day, are you going to be making more money here by expropriating it? I would argue that is the underlying argument that Barrick is making without saying it in as many words. So, of course, in the transcript, there are questions from analysts. So Greg Barnes, TD Cowen, analysts asked, so second question is around Mali. How far apart are you? Because I know the government has approached you with new demands. Is this a wide gap, or is it something you think you can resolve very quickly? Or is this going to be a situation that drags on for some time? Now, I believe this is referring to the audit that Mali did of the gold mining sector in 2022. And Bristow basically says we are engaging, it is challenging. The organs of the government are still there, despite there being a junta basically in the executive. And you can find the whole transcript and recording on Barrick Gold's website. But this is the part I wanted to highlight. So this is Mark Bristow. And for me to say it's going to be easy, look, we've had some very engaging conversations in Mali over the last 28 years, and that's where we are. But one thing I can tell you is that we've challenged the authority about these rumors. And they have very clearly said to us in writing that they have no intention of expropriating their assets. And that's all I can tell you at the moment. But it is dynamic. It is a very stressed economy we are dealing with. All of the 5 of the G7 countries have full embassies in the country. Everyone's concerned about taking the country forward, particularly the Western powers. Kind of interesting considering there's a military junta at the top. And definitely the Malian authorities are clear that they want to do something that's good for Mali. They're not trying to sort of take Mali. And well, that's certainly what they've told me directly. So I'm sorry I can't give you more granularity, but I'm actually, as I usually do, I'm just giving you the lay of the land. So, Bristow doesn't have all the answers as to what they might be trying to do, but he has confronted Mali with the rumors, and it sounds like they have assured Barrick that they do not plan to expropriate this mine. So status quo for now. And so that is the latest on Barrick. And just looking at the share price here, $16.67 on the New York Stock Exchange, down on the year where it started the year at $17.88. So it has risen, with the gold price since February 14th at $14.06. But ultimately, not the kind of price action you would hope for as a gold stock investor, probably underperforming gold itself, interestingly. And finally, one more headline here. This is Reuters via mining.com. Barrick CEO says not interested in bidding for Anglo American. And we'll have a few more stories coming up here on the BHP Anglo American saga. Now, continuing in Africa and in the Eastern DRC, more developments. So we saw, I believe it was last week, where the Democratic Republic of Congo issued a cease and desist letter to Apple, saying they were getting their minerals, which if you read between the lines, you could start to think that, this was tantalum that was being discussed from rebel-held mines, in effect resulting in the trafficking of what are sometimes called conflict minerals. We got an update on what's going on there because, of course, in the middle of the country, if you go straight east, there's a small country of Rwanda, adjacent to this very large DRC, Democratic Republic of Congo. And there are the M23 rebels, which at one point the EU was saying were supported by Rwanda. And there's a lot of allegations that this so-called rebel group are in fact, again, funded by Rwanda. And so they are called the M23 rebels, and they are in the area of these coltan deposits, where a huge ratio of the world's supply of coltan and tantalum come from this specific area, and it is required for many electronics, as we have discussed in previous programs. So here's a headline from Reuters. Congo M23 rebels claim control of smartphone mineral mining town. Quite a headline. Control of smartphone mineral mining town. Welcome to 2024. M23 rebels in Eastern Democratic Republic of Congo have taken control of Rubaya, a key mining town for the smartphone mineral coltan, following days of intense fighting, a rebel spokesman said. Congo's east has been plagued by violence since the 1990s, killing millions as struggles over national identity, ethnicity, and resources saw neighboring countries invade and a myriad of armed groups spring up. Willy Noma, the Tutsi-led M23 military spokesman, told Reuters the town in North Kivu was under their control after they went after other armed groups in the region, including the Forces for the Liberation of Rwanda, which is composed of ethnic Hutus. Congo's army spokesman for its operations against the rebel group, Lieutenant Colonel Guillaume Nijke, told Reuters it could not confirm if the rebels had seized the town. Quote, "We are in the process of cross-checking since yesterday whether or not it has fallen to the hands of the M23 rebels," end quote. And finally, most of Congo's mineral resources are concentrated in the east, where insecurity has worsened since the M23 made a major comeback in March 2022. Rubaya holds rich deposits of tantalum, which is extracted from coltan and which is a critical energy transition mineral, also used in the manufacture of smartphones, laptops, and game consoles. The M23 have already taken control of Rubaya twice for a few days since their current offensive began, so it seems quite clear that the critical minerals are the target here. Not just land, not just territory, but the actual deposits. Now, there was a very interesting report that came out of Al Jazeera Blood minerals. What are the hidden costs of the EU-Rwanda supply deal? And of course, this brings up an excellent point. We're hearing the EU, on one hand, is criticizing Rwanda, saying that they are supporting the M23, as we saw about 2 months ago. Simultaneously, they're signing deals with Rwanda for their supplies of critical minerals. Continuing with Al Jazeera, EU plans to secure supplies for Green Revolution from Rwanda are likely to support smuggling of conflict minerals from the Democratic Republic of Congo. And this is by Lorraine Mallender at Al Jazeera. As the Green Revolution revs up, the European Union has signed a deal with Rwanda that will ensure a supply of precious minerals needed to build clean tech like solar panels and electric vehicles. What's not to like? As the European Commission described it after inking a memorandum of understanding back in February, the deal will, quote, nurture sustainable and resilient value chains for critical raw materials, end quote. But all is not as it seems. It turns out that Rwanda is a country that exports more than it mines. Vast amount of minerals like coltan and gold are smuggled from the war-ravaged Democratic Republic of Congo to Rwanda, where they enter global supply chains. The racket has been extensively documented by United Nations experts reporting on the DRC war, a spillover from the Rwandan genocide, which has dragged on nearly 3 decades, the outside world largely ignorant of the widespread use of rape to subjugate enemies and the massacres that have killed a staggering 6 million people. The DRC says M23 rebels who claim they are protecting local Tutsis from Hutu genociders in the resource-rich East play an instrumental role in moving the goods over Lake Kivu. The DRC accuses Rwanda of backing the M23, an allegation Rwanda has consistently denied. Last year, Congolese Finance Minister Nicolas Kazadi said his country's economy was losing $1 billion a year in minerals through the illicit trade. So not exactly a consistent policy out of the EU, one could argue. So that story continues to have legs, as they say in the news business. Continuing on, here's the article in Foreign Policy. Without Indonesia's nickel, EVs have no future in America. And this is by Luhut Binsar Panjaitan, Indonesia's Coordinating Minister of Maritime and Investment Affairs. So a government official is speaking out against this idea that the U.S. needs to basically do something about Indonesian nickel production because it's unenvironmental. As the writer says, yet some members of the U.S. Congress working together with Indonesia's foreign competitors have resolved to stymie the import of refined nickel from my country. So far, they are succeeding. And when taken together with measures passed in March compelling companies to shift away from selling gas-powered vehicles, it is ultimately U.S. auto workers who will lose out. And then scrolling down a bit, the senator's objections tend to focus on environmental concerns. Many Indonesian smelters are powered by coal. For some, that means any battery containing its refined nickel is discredited, despite the net carbon benefit of taking combustion engines off the road. Such climate purity breeds inertia and is ultimately self-defeating. Environmental trade-offs are as critical to the green transition as nickel is to the batteries that will power it. Indonesian nickel will become greener. Yet for this to happen, economic development is crucial. Only with export receipts or foreign direct investment can we begin to reconfigure the energy system. For instance, Harita Nickel, Indonesia's largest nickel producer, can only introduce renewables at its facilities on the shoulders of its economic success. Very interesting argument. If you want us to greenify our processes, we need to make some money in order to pay for that. So interesting debate in foreign policy. Another headline, U.S.-Philippines eye agreement to cut China nickel dominance. This is Bloomberg News. The U.S. and Philippines are in discussions over ways to prevent China from dominating nickel processing in the Southeastern Asian nation, a key supplier of the metal that's crucial for electric vehicle batteries. One measure under consideration is a trilateral arrangement through which the Philippines would supply raw nickel material, the U.S. would provide financing, and a third country such as Japan, South Korea, or Australia would offer the technology required for smelting and refining, according to people familiar with the matter. And then we heard from the Philippines Environment and Natural Resource Secretary Maria Antonia Yulo Loizaga, who said in a text message, "The Philippines stands ready to partner with all countries who are pursuing energy security for all in a low-carbon world. They must practice responsible mining and advance our global competitiveness by investing in onshore processing. And just finally, on this whole green metal theme, LME plans for aluminum producers to submit carbon emission data by 2025. So now the LME is talking about aluminum producers providing carbon emission data. This is Reuters via mining.com. London Metals Exchange on Wednesday launched a consultation requiring producers of aluminum brands deliverable against its contracts to submit carbon emissions data by March 2025, less than a year from now. The proposal aims to align aluminum market with the requirement of Europe's Carbon Border Adjustment Mechanism, which applies a carbon-related cost to certain imported products. You can see how the tariffs are going to come in. They're going to be environmental tariffs. Again, it feels like this is the card that the West is going to play in order to level the playing field here with China. And you can almost imagine the card being played in a similar way to the national security card and how that's played oftentimes. We need to put tariffs on, product XYZ for national security reasons. Remember, it was even on cars. We can't let BYD in because their cars are going to be connected to the internet and they'll be collecting information on American citizens. One imagines that this is going to be the next card that will be played here in order to protect Western industries. To speculate here, LME approved producers of primary aluminum, aluminum alloy, North American Special Aluminum Alloy Contract will have to submit both Scope 1 and Scope 2 emissions data to the exchange. Aluminum producers will have to make the first entry of 2024 emissions by March 15th, 2025, and are required to update it annually. Brands that do not submit emissions data could be delisted. And finally, scrolling down a bit, the LME is also considering collaborating with its partner, Metals Hub, who is also going to be in charge of the green nickel contract, to list on, quote, LME globally deliverable low-carbon aluminum, end quote, product to track liquidity of aluminum, which falls below a specific carbon footprint. So it sounds like this Metals Hub wing of the LME is really the testing ground for what could eventually, one imagines, appear on the LME. Coming up, I'm very pleased to welcome to the show Roberta Caselli, investment strategist, commodities at Global X ETFs. Back to the show. We discuss the main metals that are capturing Roberta's imagination right now, which are uranium and copper. It's a very interesting discussion on what is happening in these very topical markets right now. So lots to look forward to there. If you want to find us online, you can find us at northernminer.com. You can find us on Twitter at Northern Miner and on Instagram at The Northern Miner and on Facebook, LinkedIn, and YouTube, where we also host this podcast and wherever podcasts are available, including Spotify, SoundCloud, and Apple Podcasts. And with that, let's turn to the news. Turning to the website, let's get the latest on BHP. Bit of a weird headline from Reuters via mining.com. BHP bombshell puts South African mining in a hole. BHP has put South Africa and its mining sector on the spot. The $140 billion Australian group's ambitious swoop on rival Anglo-American would see one of the Rainbow Nation's most familiar companies largely withdraw from the country more than 100 years after it was founded. The more I think about this merger, it seems overambitious. Like, if Mike Henry pulls this off, the CEO of BHP, I mean, who's not going to be impressed? But it just seems like this is not the kind of time that, a country like South Africa wants to lose its main mining company. Let's continue here. The question is whether the government in Pretoria can stop the $39 billion transaction and whether it should. South African officials have so far given BHP's proposal a mixed reception. Gwede Mantashe, the country's mining minister, told Bloomberg he, quote, wouldn't support the deal. But President Cyril Ramaphosa's spokesperson described the approach as, quote unquote, normal market activity. Now, the normal market activity quote came out before the mining minister saying he, quote, wouldn't support, end quote, the deal. In reality, Pretoria has a host of reasons to be awkward. South African mining is in decline. As a contribution of GDP, it has fallen from 21% in 1980 to 7.5% in 2022. The country's platinum, diamonds, coal, and iron ore are not integral materials to the all-important energy transition. Corruption scandals at state utility Eskom and issues at freight carrier Transnet have led to frequent electricity blackouts and problems for miners trying to get shipments out of the country. You know, the only problem with these rational arguments, one thing I've noticed on resource nationalism, it's an emotional issue. I think of Teck in Canada. At the end of the day, their main copper assets, which is what people seem to care about, were in Chile. And yet there was a sense that Canadian resources were being sold off, that were under threat. So is that a rational argument? No, but it's an emotional argument. I'd argue this is what this, reasoning is not accounting for. At the end of the day, South Africa just may not want to get rid of Anglo-American, and they don't even need to have a good reason for it. They just might not want to on emotional grounds. I would argue, founded in Johannesburg in 1917. So just to set the table there with the government, sending out mixed signals, one could argue, although I'd say actually being relatively quiet, it's almost like they're trying to figure out what to say. Meanwhile, Anglo CEO meets South Africa mines minister after BHP's takeover proposal. So Anglo-American CEO is meeting with the South Africa mines minister, and this is Reuters via mining.com on May 3rd. Anglo-American CEO Duncan Wanblad is meeting on Friday South African Mines Minister Gwede Mantashe for the first time since the miner rejected BHP Group's $39 billion takeover bid, a source familiar with the matter told Reuters. Anglo declined to comment on the meeting with Mantashe. The source did not give details of the meeting. So perhaps the most important thing to note here, though, is Anglo-American CEO is meeting with South Africa's mines minister. And here we go, May 2nd, so the day before, BHP CEO flies to South Africa to push $39 billion takeover. And this is Bloomberg News via mining.com. BHP Group has deployed a senior team, including its chief executive officer, to South Africa as the world's largest miner ramps up efforts to win over government officials, regulators, and local shareholders, all of whom could yet determine the outcome of its proposed tie-up with rival Anglo-American. And scrolling down a bit, despite its own historic links, BHP is starting on the back foot in South Africa, where the new London-based Anglo was founded and remains a household name, after its approach for the smaller miner last week caught senior officials off guard. BHP's complex proposal includes a plan for Anglo to spin off its Johannesburg-listed platinum and iron ore units before an eventual takeover of the remaining assets. Now, here's the kicker from a political point of view. The country is due to hold a national election later this month, a keenly contested race which could see the ruling party lose its majority for the first time since the African National Congress came to power in 1994. The opposition has already presented BHP's bid as a stinging rebuke of the government's handling of the economy in a country with one of the world's highest unemployment rates and deteriorating infrastructure. And then scrolling down a little further, even with more clarity, a charm offensive will be tough to pull off. Mining Minister Gwede Mantashe told Bloomberg on Wednesday, a public holiday in South Africa, that BHP had not yet contacted his department to explain its plans. Also, the ANC's national chairperson, he said that he, quote, wouldn't support, end quote, the deal as currently outlined. As currently outlined is what the article added. The minister has criticized BHP for divesting its South African assets in 2015 through the creation of South 32, only 14 years after its merger with Billiton PLC. BHP declined to comment. So another story here from Bloomberg, this May 3rd, BHP's biggest rivals sit on the sidelines of Anglo M&A drama. Both Rio Tinto and Glencore are more focused on waiting for opportunities to snap up specific parts of Anglo's business as BHP's bid unfolds, rather than pursuing rival offers for the entire group, which is probably a pretty smart plan. Again, they must look at this and think, like, we called last week's episode, the interview with Cecilia Jamasmy, Mining.com editor-in-chief, a complex story. It is an incredibly complex takeover. One could argue it's too complex. And so Glencore and Rio Tinto are probably looking at this and saying, like, let's let Mike Henry do all the hard work here, and then we'll see what everything gets valued at. And whatever that value comes to, maybe we'll decide then that we'll, take that puzzle piece and maybe that puzzle piece over here. So maybe not a terrible strategy. Continuing on, BHP's high-stakes tilt for Anglos puts regulators in the spotlight. This is Bloomberg News via mining.com on May 3rd. BHP Group's audacious approach for Anglo-American stands to reshape the global mining industry if it succeeds as planned, and antitrust authorities from China to South Africa and Japan are likely to play an important role as shareholders in determining the final outcome. I would add Chile to the mix, which is where the main assets are that this deal is all about. I would imagine Chile is another player here that could completely nix this deal. And then just scrolling down the article, Alan Trench, professor at the University of Western Australia Business School, told Bloomberg, quote, "I would totally anticipate that China would complain, full stop." And here's another quote from Craig Lang, principal analyst at CRU Group. Quote, "Glencore's bid for Xstrata came at a time when the China demand story had already been driving the copper price for more than a decade, and there were some questions over how long that had to run further. It was pre the green energy transition, which is driving the demand outlook today." And here's a very interesting quote from Lester Ross, Wilmer Hale law firm partner, who said that Beijing would have concerns, stressing that China would have to ensure supply is unaffected. Quote, "The most important thing, more than the price setting, is simply access to and control of the resource," end quote. And I brought this up in my last question to Roberta Caselli in the interview. Do you think, supply can meet demand in 2030? To me, I thought this was quite an interesting quote. They're just trying to ensure supply, period, regardless of the price. Like, this is the thing. With copper, with so few projects being in the pipeline, does it even matter the price at a certain point if there is simply not enough copper? So just an interesting dynamic here. They do have a quote on Chile. Juan Ignacio Guzman, head of GEM, a mineral consulting firm in Chile, said, quote, "In antitrust terms in Chile, there are no risks from the point of view of copper production, since Chile practically does not consume this metal," end quote. I wonder, does Chile have nothing to say about this, considering the main target of this acquisition are the huge copper mines in Chile? Also, based on what we've seen with how they've been treating lithium in the country, as well as the difficulties that Codelco has had, I would think they're going to have some kind of thoughts on what is happening here and not a no risk. I'm very surprised to read that. So very interesting as we continue here. And finally, another headline from Bloomberg News via mining.com. Anglo-American takeover price needs to surpass £30 per share, survey shows. Continuing on, kind of a related story, Brazil rejects Vale BHP $25 billion offer for mine disaster. So we were mentioning last week how because of the Samarco mine disaster in 2015, the dam collapse, Vale and BHP were offering $25 billion, and that has been rejected by Brazil. So quite interesting. Continuing on, deep sea mining, a leadership battle is brewing at deep sea mining's regulatory body. This is Bloomberg News via mining.com. Let's see if we can get an update on what actually is taking place at the ISA. The Secretary General of the International Seabed Authority is set to run for a third term, leading the United Nations-affiliated organization that regulates deep sea mining, as control of mineral resources used to make electric car batteries become a focus of U.S.-China rivalry. The ISA's 168 member nations and the European Union will elect the next Secretary General at what is expected to be a pivotal meeting in July. Secretary General Michael Lodge, a UK lawyer, will be opposed by Brazilian marine scientist Leticia Carvalho in an election that will shape the future of deep-sea mining. It comes as the ISA faces pressure to finish writing regulations that could allow mining to begin within the next 2 years. So, Michael Lodge, a UK lawyer, is trying to run for a third term. And here is a quote from ISA member state Kiribati, a small South Pacific island nation that announced it would sponsor Lodge's nomination. And here's the quote, "Kiribati considers Michael Lodge uniquely well-placed to continue the excellent work he has done to date," end quote. According to the diplomatic note the country sent to UN member nations, which was obtained by Bloomberg Green. Kiribati controls a mining concession, meaning it would receive royalties and other payments if seabed mining proceeds. If Carvalho is elected in July, so the Brazilian candidate, she would likely represent a marked change from the administration of Lodge, who has disparaged environmental opposition to mining deep ocean ecosystems for valuable minerals and drawn criticism for his closeness to mining contractors the ISA regulates. So sounds like Lodge isn't buying into the environmental opposition. Again, looking at the 60 Minutes report, I'm curious if people have comments here. It looks like an industrial-grade vacuum cleaner sucks in all the sand off the bottom and everything else with it, and then keeps these so-called nodules and then puts everything back through its vacuum cleaner. And again, this is not picking up rocks on the beach, as is sometimes described by people in deep sea mining. And I have reached out again to the mining company. They said their CFO was available and then didn't reply once I said that would be fine. So I continue to ask the mining company, TMC, for an interview here so they can answer some of these questions. Continuing on, and Alicia Hyatt at the Northern Miner has put out a great editorial here, Underwater Power Play for Metals in Full Swing, that is on northernminer.com, which will bring you right up to date on what is happening in deep sea mining. And just a few headlines as we wrap up here. Boliden to restart Europe's largest zinc mine. And this is by Cecilia Jamasmy on the Northern Miner. Swedish miner Boliden plans to resume production at its Terra zinc mine in northeast Ireland after reaching an agreement with unions to lower costs, which will cut the operations workforce by a third. Now, interestingly, zinc's doing quite well right now. It's kind of the metal that, people aren't talking about, but has performed quite well. Continuing on, Fortescue begins building Arizona green hydrogen plant. And remember, Anthony Milowski, who actually we have an article on here as we wrap up, as we had the discussion on nickel and what Western governments can do in the face of BYD and their much cheaper electric vehicles, Milowski was suggesting that maybe they would just pivot to hydrogen as a way of just avoiding China's stranglehold on the supply chain of EV batteries. And so an interesting headline here in that context, Fortescue begins building Arizona green hydrogen plant. That's Cecilia Jamasmy on northernminer.com. Continuing on, another headline, scientists say new water battery can hold more energy than lithium cells. And this is on mining.com, a staff writer. Chinese scientists have developed a water-based battery with nearly double the energy density compared to traditional lithium batteries, according to new research published in a paper in Nature Energy. So now we're going to have a water battery. It's quite interesting how this is all going to turn out, isn't it? I mean, maybe lithium and all of these critical minerals that everybody is desperate for, maybe it gets replaced by water. Another headline, automakers win extension on use of Chinese graphite in EV tax credits. And this is Reuters via mining.com. The U.S. Treasury Department on Friday gave automakers additional flexibility on battery mineral requirements for electric vehicle tax credits on some crucial trace minerals from China, such as graphite. The department said it would give automakers until 2027 to remove some hard-to-trace minerals like graphite contained in anode material and critical minerals contained in electrolyte salts, binders, and additives. Another headline, graphite miners lobby U.S. government to impose levy on China-sourced EV material. This is Reuters via mining.com. North American graphite miners are lobbying the U.S. government to impose a 25% tariff on 3 graphite products sourced from China in order to counter Beijing's monopoly on a key material used in automobile batteries. Another headline, MP Materials reports wider than expected Q1 loss on weak rare earth prices. This is Reuters via mining.com. And so MP Materials, which has the Mountain Pass mine in California, where it extracts the metal and processes it, they have taken a big loss. Rare earth prices have collapsed more than 50% over the last 2 years, partly hurt by a slowdown in EV demand along with economic and geopolitical uncertainties. CEO James Litinsky said the company experienced, quote, continued difficult pricing environment, end quote, in the quarter. I keep saying here, I don't know why the West doesn't just stockpile. When we had an article about the U.S. government looking into stockpiling, it looks like something they do once a year, and they would probably look at this and say, well, prices are low, so we don't need to stockpile. When in fact, I would argue now is the time to stockpile because the prices are low and it is widely available. And we can see it's an important strategic asset to editorialize. And also Goldman Sachs settles 2014 class action lawsuit tied to metal trades. This is Reuters via mining.com. And the metals in question that they were seen as conspiring to manipulate are physical platinum and palladium prices. So first it was JP Morgan, I think, with gold and silver, and then Goldman Sachs with platinum and palladium. Finally, Nickel 28 fires founders on quote-unquote serious misconduct that they deny, Bloomberg News via mining.com. And of course, we had Anthony Milewski on the show only, I think, 2 or 3 weeks ago. Now he is in the headlines. Nickel 28 Capital said it has fired its founders, including Chief Executive Officer Anthony Milewski, after an investigation uncovered quote-unquote serious misconduct, end quote, claims the ousted management team says are untrue and part of a years-long battle for control at the Canadian mining firm. The nickel and cobalt producer removed Milewski, along with President Justin Cochrane and Chief Financial Officer Connor Kearns, with immediate effect, it said Monday, after the board reviewed findings made by an independent special committee. The investigation found evidence the management team had breached their duties and repeatedly lacked judgment, the board said. Milewski, Cochrane, and Kearns denied the allegations in a separate statement and said they believe their terminations are tied to a fight for control led by top shareholder Pelham Investment Partners, a New York-based hedge fund. Pelham didn't immediately reply to a request for comment. So a lot of allegations flying back and forth here at Nickel 28. Those are your news stories. Now let's turn to metal prices. And turning to metal prices, let's take a quick look at the bond market. For context, the U.S. 10-year bond is yielding 4.46%. That is down 0.17% from last week. So U.S. 10-year taking a break there, and the U.K. 10-year gilt is yielding 4.15%. That is down 0.15% from last week. And the Italy 10-year bond is yielding 3.76%. That is down 0.08% from last week. So yields coming down, turning to precious metals. Gold is trading at $2,322.90 per ounce. That is $7 lower than last week. Silver is trading at $27.45 per ounce. That is 46 cents higher than last week. Platinum is trading at $965.70 per ounce. That is $5 higher than last week. And palladium is trading at $986 even. That is $6 higher than last week. Turning to industrial metals, copper is trading at $4.63 per pound. That is 3 cents lower, and again, hovering at that overhead resistance there near previous highs. Iron ore is trading at $118.03 per metric ton. That is $8 higher than last week. Aluminum is trading at $1.16 per pound. That is 2 cents lower than last week. Lead is unchanged at $1.01 per pound. Nickel is trading at $8.73 per pound. That is 2 cents lower than last week. And tin is trading at $14.51 per pound. That is 19 cents lower than last week. Cobalt is unchanged at $12.62 per pound. Lithium is slightly higher at $15.33 per kilogram. That is 7 cents higher than last week. Uranium is trading at $92.40 per pound. That is $5 higher than last week. And zinc is slightly lower at $1.32 per pound. That is 2 cents lower than last week. Zooming out, a mixed bag, basically edging sideways overall. No real big dramatic moves, I would say, anywhere. A bit of a status quo week in the metals, and maybe waiting for the dollar to do its thing. And those are your metal prices. Coming up, I'm pleased to welcome back to the show Roberta Caselli, investment strategist, commodities at Global X ETFs. We go in depth on copper and uranium and what Roberta sees happening in both of those markets and where they may eventually go. I hope you enjoy the conversation, and I will see you on the other side. Joining us today, I'm very pleased to welcome back to the program Roberta Caselli, investment strategist, commodities at Global X ETFs. Roberta, welcome to the show.
Thank you very much. Thank you for having me.
Well, I'm thrilled to have you back, Roberta, because it's gotten very interesting and, dare I say, exciting in the metals markets as of late. We have a lot going on in copper. and also in uranium, as well as other metals, as we've seen with nickel in Indonesia and more. So there's lots to talk about. Just to open things up here, what is front and center for you right now on your radar? What's captured your mind as far as this subject?
Yes, sure. So definitely, I would say at the moment, copper and uranium are my main focus. And I would say the markets are pretty interesting at the moment. Thinking about uranium, for example, I'm seeing that now this new price environment is very important for mining companies in order to be able to ramp up production in the long term. So we have seen substantial rally last year, and now we are seeing prices consolidating £100 mark. So again, the uranium market is continuing to be strengthened by the global government's backing for nuclear energy, and we see additional expansion announcements from many countries, the latest from Ukraine, for example, and also Serbia and Bulgaria. But I would say that now the opportunity has shifted from the spot market to the supply chain. Indeed, even if we continue to see this price level, now mining companies are in a situation where they can actually be incentivized to produce more and to profit from positive margins.
Very interesting. So when you say the market is shifting from the spot market to the long-term market, if I understand you correctly, what does that mean? It made me think of Sprott's uranium fund. What does it mean when the price shifts over from spot?
Yes, definitely. So mining companies need to have an incentive price in order to ramp up production. And to give you an idea, at the moment, we estimate that to be around $90 per pound. So we have seen a huge rally to 106 at the beginning of February, and now the spot price is consolidating under the 100 mark, mainly among a buying pause and hedge funds profit taking, I would say, but yet these prices remain at levels that are not seen in 16 years. So at the moment, miners require this current price environment to be supported for a long time in order to ramp up output due to their long lead times. And definitely mining companies operate on the long-term market as well. And so the long-term price definitely tracks the spot price. And so that's why I'm saying that the opportunity is shifting from the spot market to the supply chain, because now they are in a price environment where they can actually benefit and start to ramp up production and start to fill the gap in the market.
Okay, excellent. And we're discussing before the show, you're mentioning there's this issue of the United States potentially banning the import of Russian uranium. I had seen a story just the other day about how this was being discussed, but it sounds like it's taken a step forward. What is going on, as far as you understand, with this ban in the US of Russian uranium?
Sure, definitely. And to that, I would take a step back and say that actually there was one of the driver for this uranium rally that we saw. Indeed, above all, the perception of insufficient existing capacity to meet optimistic long-term demand raised uranium prices. And in particular, also the geopolitical concerns, and in this case, the potential of a ban to Russia uranium imports in US. And that was passed in December in the House and then was pending until this morning. The US Senate approved the legislation banning the import of enriched uranium from Russia. Now the last step is for Biden to sign on it. But the ban is very supported for two reasons. First of all, the US has the willingness to build their domestic uranium industry and to become more independent from Russia. And again, the long-term ban is also what can unlock 2.7 billion to stand up this domestic uranium industry. So both from an intention and also practical point of view, definitely there is support there. And this news is a tailwind for non-Russian uranium producers overall. Indeed, limiting Russia's uranium sector could restrict secondary supply, making the uranium market even tighter than it already is. So to give you an idea, Russia is the top foreign source of enriched uranium, accounting for about a quarter of the fuel used to power America's fleet of over 90 commercial reactors. But also globally, it accounts for for around 35% of enrichment services. And I would say not just this dynamic, this narrative on US and Russia, but also other disruption factors on the supply side were key for the rally that we saw. I'll mention just two, for example, both Cameco and Kazatomprom, that are the biggest mining companies in the space. They had some issues for production owing to sulfuric acid shortages on the back of geopolitical issues, what we saw in the Middle East. And so the consideration that also the biggest mining companies could have delays in ramping up production definitely supported the price even more.
Very interesting. And as someone who pays attention to this market, how practical is this ban? Like, put it this way, as someone who pays attention myself, but maybe not as closely as you, I wonder, is the US shooting themselves in the foot? Because all I see are dramatic stories of constrained supply in uranium. So from your perspective, I mean, do you think this is a good idea? Like, do you think this is going to work?
I think that's feasible, but of course, there are some risks. And one that I would underline here is also the possibility of Russia to retaliate. Indeed, I would say at the beginning of the year, one news that was pretty relevant is that there is the possibility that the Kremlin could take proactive measures to halt U.S. shipments if Washington then imposes these restrictions from 2028. So the possibility of retaliation and so to anticipate this shortage definitely is a risk. But I think it's clear the willingness from the United States, but also overall globally, to invest not only in nuclear energy, but also in the uranium supply chain. So that's key, I would say, beyond the geopolitical concerns. There is a willingness to invest in that. Also, for example, the UK just recently announced an investment to build capacity to produce the new uranium fuel needed for advanced nuclear reactors.
Okay, excellent. And just finally on uranium, if this goes through, do you see there being, like two uranium prices, like the price for non-Russian uranium and the price for Russian uranium? And I'm asking you to speculate a little bit because it hasn't happened yet. Would this, in your view, potentially bifurcate this market and split it into two markets? How would this work?
I think the main impact is going to be on the price for enriched uranium. And so we could see a spike there. I read this morning that actually there are waivers. And so the impact is going to be maybe not that exacerbated, but yes, definitely I think we are going to see the impact of this ban on the secondary market more than the primary market.
Okay, very interesting. So is there anything else on this market that you think people should know, or is there anything, again, that people should watch for? I assume you're expecting the price to go up. I mean, that is more speculation here, but what else have we not discussed here that you think maybe is worth noting?
Yeah, overall, I think it's clear now that there is a market sentiment shift. So the market sentiment towards nuclear energy is definitely changing and is also losing its stigma due to advances in technology and safety. I would say something that is important is that at latest COP28, for the first time, latest COP28 included a nuclear power pavilion with many countries pledging to triple their nuclear energy capacity by 2050. And I think that's that's a major turnaround from its previous marginalization, but also from a financial standpoint, looking at financial markets to finance nuclear energy, countries such as Finland, France, and Canada are pioneering the once unthinkable green debt to finance nuclear energy. And definitely we are seeing this shift being global, with China having the most ambitious plan. But even from a regulatory standpoint, we are seeing improvements. So, for example, the United States approved a new nuclear reactor, marking a shift towards greater regulatory flexibility after nearly 50 years. So there are a lot of changes in the space, and from a market sentiment point of view, even in Europe, we are seeing countries such as UK and France acting very fast.
It is very interesting. I mean, to call it a narrative shift is almost an understatement now. Like, it seems to be a narrative change. Like, I am hearing voices that I never would have heard talking about promoting nuclear power. So there's definitely been a huge change, even just since COP28, which felt like a shift. So continuing on, let's take a look at copper. So we had a jump here. I mean, copper was just kind of not doing much below $4 for what seemed like at least a year. It had felt like it wasn't going anywhere. And all of a sudden, I don't know, 6 weeks ago, it broke through $4. And here we are. What are we at now? 453. We were at 464, I think, yesterday. What's driving this move in copper, in your opinion?
Yes, in a nutshell, say the recent supply disruption that we have seen could bring down the copper market into a deficit. And from the demand side, any indication of further rebound in demand, I think it would have a significant impact on this already constrained market. And also more stimulus from China definitely could support domestic industrial demand. So it's both, say, a demand and supply story. Maybe starting from supply, we have seen disruption in major mines, especially first Quantum, the biggest mine in Panama, was closed down in December. And so 400 KT were suddenly removed from the market. So it wasn't just that, also we had some other outages in Zambia due to drought conditions, but overall, we have seen a market shifting from a balanced market to a market in deficit, and due to disruption, major mines. We also, as a consequence, Chinese smelters have been left with a sharp decline in concentrate treatment fees. So now the question is also on the refining side, not only on the mining side, whether Chinese smelters will make meaningful cuts to output in order to safeguard their earnings. And on this path, we have seen recently, a couple of weeks ago, that they suggest a 5 to 10% reduction in production in order to, again, safeguard their margins. On the demand side, we are seeing, first of all, also China, that normally is weighing on the prices because of the weakness coming from the property sector. Also from China, now we are seeing signs of improvement. So, for example, just yesterday, the latest manufacturing PMI was higher than expected. And from a stimulus point of view, the recent news on China's ruling Communist Party to vow basically to explore new measures to tackle always the property sector crisis and to stimulate the economy, also hinting at a possible rate cuts. That's definitely a positive. But more than China, definitely the growing faith in new structural green demand is the main driver. But also the artificial intelligence boom and India's massive infrastructure spending are playing a role too.
Very interesting. I mean, there are so many narratives here that are in copper's favor. It's kind of wild. So there was the Chinese copper smelter story, and I'm wondering if you can explain the mechanics of that, because it really did seem to trigger. If I was to look for one, trigger point, or one catalyst, it definitely would be a contender, you might say. Can you explain the mechanics of the smelters for us?
Of course. So normally smelters get paid a treatment fee in order to refine the ore. Now, considering that we had disruption at many mines, there wasn't enough ore anymore to treat. And so the treatment fee, there was a meaningful fall in the treatment fee. And that's why they decided to stop their production. So I would say that's the dynamic. There wasn't enough demand from their services. So that's the demand and supply from mining companies and refining companies.
Very interesting. So if we were, say, copper analysts, we would be very curious to see how the smelters are doing, which is probably why we got those stories, because to your point, if there's not enough copper coming in, then they have to lower their fees, which suggests there's going to be a reduction in supply.
Exactly.
Absolutely fascinating. Now, is there anything else of note that you think is worth mentioning that we haven't mentioned here as far as the copper market? Do you expect this rally to continue? For instance, if you look on the chart, it looks like $5 was basically the highs. Do you expect it to continue?
I expect it to continue, especially again for a similar reasoning to what I mentioned for uranium. So we need to have a price that is high enough to incentivize mining production. And I think considering the cost curve and considering the levels we are at, and considering also the investments that mining companies need to spend, I would say that there is still room to grow. And as you mentioned before, there are many drivers at play, not only the disruption that we have seen on the supply side, but also there are new demand tailwinds. Before I mentioned the artificial intelligence boom, and that, for example, could translate in an equivalent to around an additional 2% increase to copper annual demand to 2030. And just if we think about the demand coming from the energy transition due to the usage of copper in electric vehicles, renewables infrastructure, and so on, we expect copper demand to double by 2030. So I think there is still room to go, and especially for mining companies to benefit from new production. Just lately, we have also seen, for example, the news on the BHP effort to buy Anglo America. And I think that's an example of how industry participants are trying to sometimes merge rather than build new mines due to high costs and long lead times. So to accelerate the supply efforts, we are also seeing consolidation in the space. And this, again, underscores the bullish outlook for copper, also the BHP willingness to benefit from the momentum.
It is very interesting. I was reading an article, I think it was an opinion piece, where someone was saying they can do all the consolidations and mergers they want. That doesn't bring more copper onto the market. So I guess as a final question, we hear pretty pessimistic, I guess, views on the supply, and that not enough supply is coming on. So as you're mentioning, the price needs to go up in order to encourage that supply. How optimistic are you on, supply meeting demand, say by 2030?
So definitely depends on the capex level and the funds and the flows that we are going to see in the space. Definitely the shortage is becoming clearer and clearer. And as you said, there are risks, even if the companies, as you mentioned, they can be consolidated. But ultimately, if there is no more investment and new projects, we are not going to be able to fill that supply gap. I think the industry recognizes by now copper's importance in the energy transition and its usage. And so I think we are going to be able to at least reach that incentive price. So from that standpoint, I remain positive, but definitely I think that we could have delays considering the long lead times. If I think about greenfield project could take also 10 years in an average scenario. So there are risks, but I think the industry now is trying to be more proactive than before.
Excellent. Roberta Caselli, investment strategist, commodities at Global X ETFs. Thank you for joining us and sharing your insights once again on the Northern Miner podcast.
Thank you very much.
Thanks once again to Roberta Caselli for appearing on this week's episode of the Northern Miner Podcast. And thank you, dear listener, for tuning in once again. If you enjoyed the podcast, please leave us a review in the Apple Podcast directory, share it with your friends, and until next week, take care.